company makes money every time you tap a card. And most investors still don't realize how powerful that is. You see Visa everywhere, but very few people truly understand what they're owning. If you invest for long-term compounding or dividends, stay with me, because one number here explains why Visa is one of the strongest businesses on the planet. Visa doesn't make cards. It doesn't lend money, and it doesn't take credit risk. Visa operates the largest electronic payment network in the world, connecting consumers, merchants, banks, and governments in more than 200 countries. Every time someone pays, Visa takes a tiny cut. No factories, no inventory, almost pure software. That asset-light model is the foundation of everything else. Visa earns money through transaction fees, data processing, and value-added services. The more people spend globally, the more Visa earns. Inflation, prices go up, transactions go up, digital payments replacing cash, even better. This isn't about chasing trends. It's about owning the rails of global commerce. Revenue tells the story clearly. Long-term, steady growth, no wild cycles, no drama. Visa doesn't need breakthroughs to grow. It just needs the world to keep spending. And historically, that's a very safe bet. Now look at net income. As volume increases, costs barely move. That's operating leverage at its best. Each additional dollar of revenue drops heavily to the bottom line. This is what a scalable network really looks like. Free cash flow is massive and incredibly consistent. Visa converts a huge portion of earnings into real cash. Cash used for dividends, buybacks, and long-term shareholder returns. As an investor, this is exactly what I want to see. Clean cash. No financial tricks. Margins are elite. Very few companies in the world operate at this level year after year. High margins combined with low capital needs is rare and extremely hard to disrupt. Earnings per share keep compounding over time, not because of hype, but because of discipline. Buybacks plus steady growth quietly reward patient investors. This is compounding, not speculation. Yes, Visa trades at a premium valuation. And that's not an accident. You pay more for quality, predictability, and resilience. The real risk would be expecting it to behave like a cheap, cyclical stock. The dividend won't excite yield chasers, but it's reliable, growing, and extremely safe. This is a dividend you can trust to increase quietly over decades. Debt is well controlled and easily manageable. With this level of cash flow, leverage is not a concern. Visa's strengths are clear. Global dominance, an asset-light, high-margin model, an enormous free cash flow generation. The weaknesses exist. Valuation isn't cheap. Regulatory pressure is always there. Alternative payment methods keep emerging. But so far, none of them have meaningfully challenged Visa's core dominance. I am a shareholder of Visa. For me, Visa is one of the best long-term compounders available. It won't double overnight, but it will quietly grow, generate cash, and reward shareholders for decades. Perfect for conservative, income-focused, and long-term portfolios. This is not financial advice. Always do your own research. If you want the next stock analyzed, like, subscribe, and drop it in the comments.